Okay, everybody, it is me, Gregory Mannarino. It is still Thursday, June 2nd, 2022. This is my exceptionally lovely, it's going to be exceptionally, just overwhelmingly lovely post-market wrap-up on this pretty volatile day. Gains across the board for this market. The NASDAQ being the biggest gainer of them all. I've been explaining that tech has gotten pummeled as of late and there are deals to be made. Look, what's happening right now is pretty much exactly what you and I would have expected to happen. All these freaking bears crawling out of the woodwork. It's a crash. It's a meltdown. It's a this. Yet again, they're all going to be proven wrong. Yet again, imagine my shock. These people have a record of being wrong 100% of the time. That is pretty profound. All right. So anyway, on the back of that, we got some interesting economic news I want to cover with you. Actually, a lot of stuff I want to cover with you. So let's just focus back on these markets real quick. With regard to the S&P 500, we put on over 1.8% today. We are now back above a key level, 4150 on the S&P 500. Now, I was waiting for this. I'll be honest with you. We had some obvious resistance here. Now, we're above that. It could very well become another support level, and that would be a springboard for this market to make even further gains moving forward. The Dow Jones Industrial Average today was down over 300 points. Well, we completely reversed that, finished up about 430 somewhat points. And again, the NASDAQ here really the biggest gainer. Let's glance over at the 10-year yield, 2.92. People, this is exactly what I'm talking about. This is what we need to see. And I've outlined this repeatedly and freaking repeatedly as of late. Crude oil today caught a bit higher despite the fact that OPEC has decided that they are going to increase production. And why would that happen? Because you see drawdowns in crude were larger than expected. Oh, imagine my shock. Now look, crude oil is a rigged game. If you think that metals are rigged and the market overall is rigged, well, obviously you have to include crude oil here. It's the lifeblood of the market. It's the lifeblood of the military industrial complex. It will be kept propped up by any manner, whatever they got to do. You remember they wedged the ship in the canal sideways? It was stuck in there. That was to boost crude oil. Bombings, terrorist attacks, missile strikes, you name it. When crude falls, people die. Let's go over this again. When crude oil falls, people die. You understand? This is something I don't want you ever to forget. If you take one thing away from this video, remember that. When crude oil falls, people die. Nothing is what it seems to be. I've been telling you this for the longest time. Maybe with the freak show, you're finally understanding what's going on. Let us move back here to the market to a certain degree. We got the dollar today, the comparative strength of the dollar getting hit pretty good, down 0.71%. That's a lot when you're talking about the relative or comparative strength between currencies, okay? I know a lot of you go, oh, big freaking deal. But they'll make a big deal out of it if it went up 0.71%. You see how it works? There's always a motive here. No, I don't have a motive. I'm just telling you like it is. Gold and silver today catching a nice bid. Very nice today. Bitcoin back over 30,000. Imagine my shock. Still stuck in a range. And it's in my view, we're going to be stuck here for a little while. But you also understand why. I believe the market cap of cryptocurrencies are going to balloon at one point moving forward, all on the debt market meltdown implosion, which is coming. The title of my video this morning, it's a ticking time bomb. The debt market is a ticking time bomb. And not only is it a ticking time bomb, it's the greatest threat in the world. The greatest threat to human life. Forget about war. Forget about anything else. It's the debt market. And when that thing implodes, it's going to change everything on a massive scale. So I was sitting here obviously writing some stuff down. I got 2 pages of stuff. I don't know if we're going to cover all this, I'll be honest with you. But let's talk about this. So we got this fantastic number today. If you are watching the mainstream propaganda ministries on this first-time unemployment claims number, they're like orgasmic. This is what they look like. They're spraying their shorts all over the place. This is the greatest thing. Oh, our economy is booming. This is absolute proof that we're doing so fantastic. If you noticed, while they're pushing that narrative today, they're not explaining. In fact, I didn't hear about it once except for on Bloomberg this morning. They were talking about how real wages are cratering. All right, and they're in the negative. Well, you won't hear about that. It's orgasmic number with regard to first-time unemployment claims. But listen to this one here. So this is private payrolls here increased by 128,000, which is the slowest pace since the pandemic era began. Pandemic era, that's what we're in now here with monkeypox and dog shit pox and testicular pox and whatever other pox they want to throw at you out here. And the small, and no shock here. Are you ready? Sit down. Of course, it's U.S. small businesses who got hit the hardest. Oh, wow. You mean the corporate agenda is still in effect? How about, oh yeah. Look, we have this hideous merger between corporations and a government entity. The definition of this is fascism. Look it up for yourself here. Oh, lovely. We also found this out, and I don't want to laugh, but it's unbelievable. Flying in the face of the fantastic news that we got today. U.S. factory orders rise less than expected. No one saw this coming. Oh, they're shocked. They're aghast. Oh my. Oh my. Make that stuff up. Anyway, that is the basic story of the market. Now, I want to bring something else to your lovely attention. Today, I got to prepare myself for this. We heard from the ghoul of the Fed. I am referring to Loretta Mester. Do you see her picture on the thumbnail here? She's not human, okay? She's a demonic entity from hell. And the ghoul. Let's do this together. Ready? I know you want to do it. So let's focus. You're ready on 3. We're going to do 1, 2, 3. Of the ghoul of the Fed. The ghoul of the Fed is out here with this narrative. Are you ready? And they always play this game. So I want to bring this to your attention too. This is what she said. I'm laughing. A faster pace of rate hikes is certainly possible. Oh yeah. Meanwhile, we got the other guy, Bostic, on the other side, saying the polar opposite. There may even be a pause. But that's what they do. One freak says this, the other freak says that. It never stops. It's always the same, this and that, and they're always diametrically opposed to each other. Need I say more, people? It is an absolute dog shit freak show on a massive scale. I really don't know another way to put this. So anyway, let us regroup for a moment. This market here, with regard to the S&P 500, has now broken out above the key level that I was watching here, this 4150. A lot of people watching this level. Now, this is what we need to see. And I'll cover this in my markets and look ahead on Sunday. When in any asset's price action falls below a support level, okay, and then you can obviously expect it to drop. Now, what happens is that support level becomes resistance. You understand? Now, once you break out above that, now we're here. Now we have a potential support. So what we want to see here, okay, is a pullback, a small pullback to S&P 500 support. There's no guarantee we're going to get a pullback here, but this is what I would like to see. This would solidify my thought process here, and a lot of technicians I would believe too. A drop to support, and we stay there, and then we make another move higher, because that's where this market's going, okay? The market is going higher. Watch this. You see this? This is to all those people out here who still believe we're in a market crash, for which the S&P 500 never once has fallen into a, by definition, bear market. We haven't even gotten there. Okay, neither has the Dow Jones Industrial Average. Yes, of course, the NASDAQ has. But I've outlined this for all of you, what was going on and what it is potentially still going on here. The tech sector is extremely interest rate sensitive. Okay, when you are in an environment like this, you would expect to see, although this was a little bit dramatic, admittedly so, the tech sector take a hit. Okay, but as we're getting it has to adjust. Markets don't adjust overnight. Things sometimes take a while to play out, and I still think that's what we're in now with regard to the tech sector. But I think there's an unbelievable amount of opportunity here. As a matter of fact, today I just sent this out in my newsletter. I don't know, 20 minutes ago, I added to my position of IBM. It's one of the positions I am currently holding. You want to see all of my positions? I'm an open book for everybody. Just click on the link down here, traderschoice.net, scroll down to below the chat room. Those are my most recent stock picks. You understand? Go have a look at these things. I want to bring a couple of other things to your attention, and we'll talk more about this on Sunday too, but let me just get it out here. Any dips here with regard to oil and gas producers, okay, I'm talking about ticker XOM, ExxonMobil, CVX, Chevron, and DVN, Devron, you gotta, in my opinion, and do your own research here, be taking advantage of any dips here. The energy sector, we haven't seen anything yet. It's going much, much higher. The financials are starting to play. Obviously, you got tech starting to play here. Everything that we said we needed to see. We needed to see, again, crude oil get bid higher, the 10-year yield move up. We needed to see banks, financials start to play, and the tech sector. Well, here it is. It's right here. Everyone wants to play. They all want to play. They all want to play. Yeah, they want to play. I want to play too. How about you? You want to play? I bet you do. I bet you do. All right, look. I have a little bit of news for you. You might not like it. You might not like it. But I'm going to tell you anyway. I will not be doing a video blog tomorrow. It's impossible for me. I do apologize for that. But, you're going to see me on Sunday for my markets look ahead. So what we are going to do, you and me, look, I'm going to make a heart. How do you do that thing? How do you make that heart? Is that it? A love heart. No, that's wrong. I can't get it right. You know what I'm talking about. You know, people do those little heart things. I never did one before, obviously. Anyway. We're going to treat today as if it were Friday. All right? And we're going to do what we always do. Every single lovely Friday. All right? We're going to bring it in. No one's looking. And I want you to do this. Are you ready? Love each other. Care about each other. Be charitable. Please. The more of us that embrace these three things, the better off we are all going to be. That's a fact, all right? Love you a lot. Please share the video. Comment here. I want to hear from you. I will see you on Sunday for my markets and look ahead. It'll probably be out a little later than usual, but I'll see you, I promise. Have a great, great weekend, everybody, honestly. And, well, that's it.